All right, welcome back to another episode of the Investing with TJ show. Now, today you are looking at the gold chart, and I drew a couple of trend lines here to kind of give you a view of my thinking of what we're seeing currently. And just to give you a TLDR here, my view is that this is an instance, but not an identifier of a trend, a long-term trend. The reason why I'm saying that is because if you scroll all the way back to the summertime, we had a trend line from the heights of 2020 in the gold price, and we actually got above that in the summertime. Then we got news out of India, and it spread all over of Delta, and then we immediately went back down. But then after Delta kind of fizzled out, we start to go back up. What I am foreseeing is that what we are currently experiencing is something very similar. We got out of it, and it looked like we were actually getting above this negative trend that was newly established after the height in the summertime, which, to me was very bullish, in addition to the fact that we had a golden cross in gold, extremely bullish. Then we got news out of Europe about the lockdowns and the mandatory jabs in Austria. And then after that, we got news of Omicron in South Africa. And then immediately we, started tanking. So what I'm basically saying is that just in the way that we tanked because of Delta and then eventually fizzled out and we, got some positivity, I am thinking that we might see something similar. Now, this is just my opinion based on what happened this year. Now, given that Omicron is here in the United States, yesterday, California basically announced that they had it there. We also got it somewhere in the north part of the country, and now it looks like it's in Colorado. And according to CEOs in the economy, they basically see that in their view, we should basically expect the vid to be around almost, into the future indefinitely. Now, with that being said, I don't think that they necessarily mean that, expect lockdowns forever. I think they're basically saying, hey, this thing is going to keep coming back. It's going to be like influenza, and we just need to learn how to deal with this. And you had CEOs, for example, saying this. CEOs of companies from sectors including healthcare, restaurants, packaged food, manufacturing, logistics, and chip sector tell CNBC that any hope of a return to normal in 2022 is misguided, and volatility will remain a primary business challenge. CEOs see opportunity in the changes already made during this issue to become permanent competitive advantages and for global economic growth to remain strong, but it won't be without a high level of uncertainty and volatility. So in my view, just in the way that CEOs are looking at things, they're seeing this as, another blip, but that doesn't mean that the course of growth is out of the picture in the long term. Now, in my view, currently, I think we're going to have some lower growth currently right now with higher levels of inflation. And I have been saying and, beating the drum about stagflation. Now, currently, gold is, experiencing some weakness, and it has a little bit more room to go down south here in the RSI. In the MACD, it looks like it's trying to kind of get out of where it is, but like I said, there's a little bit more room for it to go south here in oversold territory. So, brace yourselves for the potential for that, but I don't think, again, that we'll stay in that area forever. The reason why is, looking at my own forecasting model here, with all the inputs that we have now, my lower limit is basically at 1756 and 80 cents. Central limits at 1863, upper limits at 1970. Currently, we are getting very close to the lower limit. And I think once we do get to that level, if we do get into oversold, even more oversold territory, I still think that we have the potential of moving up out of that. And these numbers are based on the dollar futures numbers that we got today, Bitcoin numbers that we got today, and some of the monthly information that we got recently. Now, for those of you who are interested, you can get my gold forecasting model here. I'll leave a link in the first pinned comment down below. Now, while everyone is worried about everything that's happening with gold, there are literal central banks that are buying currently. You might have heard that the Irish central bank makes the first reserve gold purchase since 2009. Now, while everybody's, upset and selling, you got large institutions buying. And you guys might have already heard Singapore adds gold to reserves for the first time in over 2 decades. So again, while we see some of this short-term weakness, we've got people taking advantage of those prices heading lower. And I even made a tweet, pretty much summing that up, saying you may have just seen me retweet that Ireland just added gold to its reserves for the first time since 2009. Singapore added gold for the first time in over 2 decades. Mind you, these countries are buying tons. Follow the money. So again, in my view, I'm pretty bullish on gold, just as these 2 large central banks are as well. So my view still stands. I still think right now we are at a point of weakness, but I don't think that will last a very long time. Take a look at where we are with the VIX. Currently, we are at 27.21. I've said it time and time again that the closer we approach the 30 level, and we got above that actually yesterday, the more weakness you'll see across assets. But if you take a look at VIX futures, the VIX going into VIX futures of February, we're down at 23.71. So there's some backwardation there, basically stating that there are lower expectations of volatility in the month of February than there are currently. So what that tells you is that lower volatility currently is expected to come in the coming months, which means that will be a benefit for gold because the dollar will have less strength in volatility. So let me know what you guys think. Please hit that subscribe button down below. Please hit the like button as well. Have a good one. It's TJ.